special stock market TV event. I am joined today by my esteemed co-host, Herb Greenberg. You may know him from the Red Flag Reports or Herb on the Street. The bottom line is Herb is one of the best in the business for as long as I've been around at fundamental analysis, covering companies that you might want to have on your radar. So quite the pleasure to be joined here today. Herb, thank you, as always, for joining me. How are you, my friend?
Okay, Steve, I'm doing just fine. And it's always great to be here with you, especially since we view the world similarly on one hand, but really so differently on the other.
I think we complement one another better than we even know, Herb.
I think that that is the reality because what I've told people, and I say this a lot, and you'll hear me say it a lot, is I'm firmly a believer that people who do technical analysis, there are those who just look at yourself and just trade the symbols.
Yeah.
And that's what they do. And that's how they get their jollies. Then there's this other group of people, I call them the hybrid traders and investors, where they're looking at the fundamentals. They use them either as a backdrop or to game the odds.
Yeah.
But somehow they are focused on those, and they're using the technicals as part of their process. So
Yeah.
there's no one size fits all for anybody. No one way works best. It's just what works for you. And so I come at it from far over here, having nothing to do with technicals.
So that's awesome. And I agree with you. I love the hybrid people, the fusion people. I've learned over the years that it's important for me to know the story, understand the fundamentals, know what's coming through the news, but then always focus more on the price reaction, right? So it's the price action or the technicals, but within the context of whatever it may be. And right now, I think we're called a special environment. The context right now is important. You wrote a post the other day. Let's start right here. Back to the Future. It's 2021 again. I've been saying similar things. I might be more excited about the fact that we might be entering some sort of euphoric phase than
entry. Might be.
It's crazy out here. So let's talk about it. I mean, again, today, one of these treasury stocks popped up. They announced they're going to be buying Binance coin. Stock was up 450%. So that's just where we are, right?
That's every day. That's just normal. That's the new normal, right? So it's going to be like that. This time is different.
What was it in 2021? Was it Long Island blockchain and stuff like that, right?
The Long Island ST became Long Island blockchain. Yes.
Right. There we go.
Or whatever.
Look out for the name changes, I guess, these days.
Yeah.
Yeah.
So the day they have dot blockchain behind them, when every company has to be a dot blockchain or whatever they call it, then it's going to be, yeah.
It's .ai today, isn't it?
Well, we know, but it should be. I'm surprised there's no .crypto, .cr. So, and maybe there is, but it's out of my sphere. So, what do we have today? I've been telling anybody that it feels so similar to 2021, and I realize that's the way many people don't look at it, and it's not being opportunistic. But I lived through 2021. I was doing long bias things in 2021 or parts of 2021 and 2022. And I can tell you that I've watched the same behavior. And as I've told people, the only difference between now and then is that then interest rates were zero, and today they're not zero. So, you have this other dynamic going on, and that's really called what's going on with crypto, pulling things along. You have the SPACs coming out, the crypto SPACs coming out, all things tied to it. And I'm not saying that some of these aren't going to be fantastic and there's not a lot in here. But what I am saying is, either you sit on your hands or you have a discipline. And if your discipline is what you guys do, that you're looking at the charts every day and you can do it, and all you can do is be obsessed with it, then, I don't know what you do, because for someone like me, I sit here, I've missed a lot of opportunities, and I literally will try to root myself by reminding myself, been there, done that, and I do not have the time to trade. I'm too busy researching businesses.
So if we just throw out, forget the current level of interest rates, because the bull in me would look at that data point and say, then we have a longer runway today than we did back in 2021. But here's at the end of the day, right, bull markets can't last forever. And if I remember 2020 and 2021, it was the stocks that were up 1,000%, Herb, that were about to be down 90 over the course of the next 12 months. So I'm sure you're out here today, right, with this crazy euphoric mode that we're in, and you're spotting candidates for tomorrow, right? Like, do you get excited when we enter some sort of a blow off stage because you know what comes after?
No, I mean, you don't, first of all, I don't even know when a blow off stage comes anymore. Everybody can sit
Right.
here and give you every anecdote, and their stories will be everywhere about this is a sign, this is a sign. Things that used to be a sign to me are not signs anymore. They don't
Right.
work anymore. I know inflection point is near. That stopped working a few years ago, based on
Right.
things that would work for many, many years. It's not that I get excited about it. I just see people getting sucked in. You start to see other types of scams that I've written about. They're actual scams that use these type of environments to suck people in who know nothing, whose friends are making money, and then they suck them in by saying, "Hey, we're going to make you an insider," and people think, "Oh, an insider! I'm an insider in
Right.
this WhatsApp group." So you start seeing these type of things evolving, and then you just know that 450% a day or in one day is not that's not normal, and
Yeah.
it's not sustainable, and someone's going to be left holding the bag. And what I keep being reminded of is 2021, even the smart people were left holding bags, and right now we're in an environment where you feel like you have to hop in, and
Yep.
that to me is a dangerous time because you're back to FOMO.
Right. I think some beautiful short opportunities can be born out of environments like this because, frankly, money gets too easy. Everybody remembers the SPAC run. Wow, my lights are flickering in the back. See that? That's a sign.
That's a
So back
sign.
in 2021, we had the SPAC bubble. The IPO market was as good as it's ever been. And basically, what ends up happening, right, is a lot of things come to market that frankly shouldn't. And then when
Mm-hmm.
the cycle ends, they get absolutely decimated and blasted. Some of them have recovered, right? But there are others from 2020, 2021. We have a graveyard of hot stocks that never came back. And I think the same thing is coming.
Of course, I think you're right. It's just, you can't sit here and say it's going to be this one, or this one. It will be parts of a group, and that's why people are diversified. But what you also have is you have this other element, and this other element that really became big after it was starting well before COVID, but it's become bigger, and now it's revised itself. And I continue to think the sports gaming aspect of investing has added this element to it that you can't really gauge or judge, and that gets down to just what we're seeing in spades now, of just people just saying it's easy, and they're not even looking at what you guys are doing and even trying to have the discipline of that. They're just going with what they've
Yep.
heard because all their friends who've never invested have made so much money so quickly. It's just this is easier than gambling. This is better than sports, easier than sports betting. This
Yep.
is easier than certainly Las Vegas. This is easier than going to the track. I live about 3 or 4 miles from Del Mar, the racetrack where the surf meets the turf. And
Yeah.
so why not do this?
I was with a buddy this weekend, new trader, and he was telling me her about all of his wins and just how good he is. And I tried a little bit, when I was with him, but not too hard. I ended up walking out of the conversation thinking to myself, damn, bull markets fix a lot of mistakes for you. It gets to a point where you could throw a dart and everything's working, but it creates this nasty feedback loop where you're being rewarded for bad behaviors. And then the music stops one day and people
Yeah.
get caught. Really. All right, talk to me
That's
about, yeah.
yeah. Go ahead. No, go ahead.
What are you watching these days? I pulled up, some of your charts preparing for this. Hims has bounced back. I mean, it's really 40% sounds like a lot. It's not for a stock like this, but it's right back where it's failed now several times, one,
Yeah.
two, three, 4 times this year. This shelf around 60, 70 hasn't been able to get it done. What are you seeing on
Yeah.
this one?
Well, it's not just I'm going to take it beyond hymns because I have a few of them that you would
Yeah.
argue make me look sillier. I get people, writing me and saying, "How could you have written about this company? How you didn't get me out of this stock or something?" And then I see they're never a subscriber of mine, so I figured it was a setup. If you look at a few of my stocks, if you look at hymns, if you look
Yeah.
at Oklo,
Yep.
which you and I have talked about over time, great
Sure.
call by you, by the way, on Oklo. If you look at well, Hims, Oklo, and there was one other notable one that I have that they've
Was
gone straight up in my face. What? There have only really been about a handful of my 35, 40 stocks that have just gone straight up, but those are
Right.
because they became memes. And so if you look at MP, say, for example, so it's MP, Oklo, and Hims. Those are the three bad boys that
Yes.
make me look like the foolish of foolish. And what I've said to people is, you know, I wouldn't change a word in what I've written on any of them because I pointed out the risks, which you can't game as a narrative. So it makes me rethink. What I have done is I have rethought my process for this environment. I don't need
Yep.
to deal with anything where there's a lot of tension because I seem to get into these before the tension's really big, and then the tension gets there and it becomes difficult to deal with. So a HIMS is a situation where you know what's happening to their base business, you know what is going on there, you know what's going on to their GLP business. Potentially, there's a lot going on in a market where right now it's like the wild, wild west, and they're winning in the wild, wild west, and maybe they will be
Yeah.
the survivor. One of the things with these short squeezes is companies get squeezed up, they can raise more money, they can do all sorts of things, and they can live to see another day, like a Carvana. The
Yep.
issue which people still want to fight about, and then you look at something like MP Materials. What I didn't have on my bingo card, I had things I warned. I had my warnings in what I write up. I know what will stump me usually. What I
Yeah.
didn't have on the bingo card was that the government was going to become its biggest investor.
I
Well,
want to talk about that. Yep.
yeah, yeah. So I didn't have that. And then, if you go to Oklo, it was the risk of the nuclear narrative. There's so much more to
Yes.
the nuclear business. There's so many private companies or companies owned by others, like a Westinghouse, which no one ever wants to talk about because it's part of two other companies where it's part
Yeah.
of a consortium. These companies probably have greater potential and will be chosen first for so many other things. But right now, the narrative drives the stocks until it doesn't, or until they actually can prove they are what they claim they are, or what the market claims they are.
Or what they want to be, right? In the case of MP, I mean, correct me if I'm wrong. I've been following along loosely, and I thought of you the other day when the news broke, because I don't know how you plan for something like this, but correct me if I'm wrong. This company, as it currently stands, fundamentally is not, it's not a sustainable business, right? They're not a viable
No,
business without help. Would you
no,
agree?
without help, they were going to have some substantial issues. But by the way, when you have some of the related parties within the company that are tied into the government, the Trump administration, and
Right.
things like that, there should have been dead giveaways that, hey, this is as I said, this is like a perfect geopolitical risk type company, and
Yes.
your risk was the next headline that was going to come along. And I think that without this kind of help, and now they've got some help for a while, and maybe it does, maybe it doesn't. We keep the stock going for a year, 2 years, or 2 months. I just don't know. But yes, that comes in and that makes a change. And this is a company that otherwise, it's sort of like some of the companies. Look at Tesla.
Yeah.
Without the subsidies, Tesla wouldn't have been Tesla, and it wouldn't have grown to be what it is. But
Yep.
the difference was the government didn't take a stake in Tesla. This is a case where the government actually took a stake, quite a big stake, and is also guaranteeing prices of certain products.
This is as good as it gets for a speculative company, right? For the government to literally swoop in and save them. I have a good story here. So this is like the same chart that we've been buying, Herb, right? Like you could see
Mm-hmm.
it. This is a primary trend reversal earlier this year. It looked really good. I got in late May. It blew my stop. I'm about to sell it, so I figured, okay, let me just check out what's going on here. I pulled up the last Q. I said, oh my God, this is terrible. So I stopped myself out right before the thing took off, right? But what do you like? How do you treat something like this where the only risk to the upside is the government saves them, but in this environment, it can and will happen to a name like MP. Like I almost want to go and look for the other ones that are
I
doing
don't
rare
know
good
that.
stuff within our borders.
Yeah, there are a few. It's good luck trying to figure out exactly the nuances of that business because there's so many levels in geology that you have to sort of think you understand, but it really doesn't matter because right now I consider that even with the government there, it's a highly speculative name at this point. If you own it as an investment, it's a long-term investment that you hopefully will have sized properly, and you either know too much or you know too little,
Yeah.
and you just don't know. So these stocks are in that level. What I'm trying to do right now is actually shift over here back to some companies that aren't making headlines. I write about Post Holdings, for instance, is one of my red flags. No one's talking about Post Holdings. Good. That's exactly the kind of company I want to be focused on, because that there's real risk there, and there are people who own it for specific reasons, and that's the whole point of my red flag alert.
So I haven't read your report on Post, but I know a little bit about this. It's a roll-up strategy on sugar, no? Right?
It's a roll-up strategy on sugar. It is a roll-up strategy on consumer packaged goods tied to cereal. Cereal is packaged cereal is their biggest chunk of their business, basically. But they've gone and they have some other elements of the business. But what it really is it's a company that was run it says in its slide presentations, is that we are run like a public PE company. So basically they're buying and selling assets. That's the business they're in. And the guy who started the business, or who actually took the business when it was spun out of Ralston Purina years ago.
Fund guy or a private equity guy?
Bill Stiritz. He was a private equity guy, and he's known as one of the great asset allocators. So for years, it would be, you don't bet against this company, because Bill Stiritz, who's now in his 90s and he's a chairman, but he's not the executive chairman, you don't bet against this guy, and it has some very substantial shareholders, people who've been with it forever. But my point in my piece was, this is a company whose business model, that public PE model, time may have passed that by. We're in a different environment now, and they're in a niche. And I would say one of the risks to my thesis is they're in a niche where there are others getting acquired now in their niche. Kellogg just got acquired, but I don't know. They traded at a premium because they're Post, and it's off everybody's radar, which is what I like.
It's a massive multi-year top. It certainly looks like distribution to me.
Well, we'll see. I think it's fascinating when you guys look at the stocks, how you look at it. And what I'd like to do moving forward, as you and I do a little more together, and as I roll out my revised red flag alerts list, is I want to actually take some of the ideas, some of the technicals. I'm not going to ever pretend to be in this technical world, but I want to flip some of your stuff on its head. And actually, I'm working with some of your folks to try to do this, where we can come up with a good list of not every short squeeze, but I'd like to turn them around to what I would call are some of the most dangerous stocks, based on some of the elements we see in those companies of those that have been squeezed. So, we're working on a few things, trying to target those as well, and use some of what to try to do that.
We're going to do it because, especially when it comes to bear market, already now, when Herb is covering a stock, it's almost like it has an asterisk in my portfolio. So when I'm scrolling through doing my account maintenance, I'm like, shit, this is a Herb stock. I don't play with them. When they turn against me, I'm out like MP, I don't need it.
Yeah, but then you're out like MP, and look what happened. See, this is the thing. I'm cognizant enough to know how this world works. And the thing is, there's so many other companies you obviously can trade or own. And even it's interesting to see how you get caught in these, or you don't get caught in these, or how you miss them. But what I will say is this: in this market, I do believe I'll say it in every market. You always have to respect the risk. I would say this kind of market is going to be one of those markets. And again, how long this swoop down occurs, if and when it occurs, people say, darn, I should have known. Just the same way I'm sitting here going, darn, I should have known that this company was a narrative company. People go, darn, I should have known. I should have taken my profits in that thing. Because this kind of market gives people so much hubris. It just it makes them feel so emboldened, especially
it gets them acting lazy. Yeah.
Well, and it's not just that. It's like the person who's new to this really thinks they've discovered something new, and all the old people don't know what they're talking about. So, some of the old people, by the way, don't know what we are talking about. But you also have to be cognizant of both sides and changes in market structure and stuff like that.
No, that's you're echoing my conversation with my buddy. He's been a genius for the last 3 months, and I could just tell by talking to him, oh shit, you're in trouble, bro. So when this bull market ends, though, we're going to short the hell out of some of these companies. We're going to pick perfect spots. We're going to nail our entries, and it's going to be great because it happens every time. It's just
wait to stop.
When does that time come? Is the question.
Stop. How do you know you're going to see it? How do you know you're going to nail it? How can you be so assured to that? You're having a great time on this run up, but I want to know how you know you're going to nail it.
I am quick to leave the party. I never want to be the last one there. I learned this many years ago, and I'm quick to leave. Now you could change your mind and come back if you're wrong, right? Um, and there's going to be some epic failed breakouts. And the way my brain is working now, speculative growth, the riskiest stocks in the market, they've been outperforming for a couple months. There's probably some runway here, but that's not going to last forever. And if you think back to the last cycle, these guys peaked really Q1 of 2021. It was Q2. It was May of 2021, which is when market internals peaked. The large caps and the indexes didn't peak until January of the following year, right? So you'll see the cracks beneath the surface, and you know what's going to happen, Herb. The worst ones, they're going to crack first, and nobody's going to talk about them because nobody cares. They're very under-owned, speculative niche names, and they're going to start crumbling, and the Mag 7s are going to look great. Nobody's going to know it.
But see, that creates the list. When they start crumbling, that becomes the new list. That becomes the dangerous stocks list. Because you say nobody's going to see it because it won't necessarily make the headlines. And that becomes something that itself, to a guy like me who's looking for risk, and then I'll say, well, okay, what's really going on in these companies? Because I'm going to tell you something. This recent rise we had with all these recent memes that came out with some of these companies, whether it's Krispy Kreme and Kohl's and some of those others. What I did is I put up a piece, and I just went to each of these companies for simplicity's sake and just put up revenue growth charts, revenue growth charts, revenue.
Keep it simple, right?
Oh, yeah, I kept it simple, and it showed you the discrepancy and the disparity between what the stock was doing and what the fundamentals were telling you, and why there's still so much risk there.
I'm shocked Krispy Kreme is still around. I haven't seen a Krispy Kreme in forever. They used to have them in like gas stations near me.
Krispy Kreme will always be around. It's a great brand. It's just always been because it's such a great brand. It's also, its cachet was the exclusivity of it. It's like an In-N-Out burger, right? So the cachet was always that you can only get at certain places, and they expanded and franchised and did all sorts of things. And then there were some accounting issues with the franchises and things like that back when they were doing the first model, the first go round of Krispy Kreme. So it's had an illustrious past. But when you see some of these and you see them come back, you go, oh, come on now. This thing's trading for $1, and now you're telling me, you have the whole thing with what was the company that Eric Jackson has been pushing lately, and it was Open Technologies. And so you look at that, and Open is maybe Open's going to be great, maybe it's not, but it's got some issues.
All right, before we dip out of here, the new nuclear names, is it just Okilo, or do you look at them as groups? Because there's a handful of these stocks that have been red hot. Do you think the whole group belongs on some sort of red flag alert, or is it Okilo specific?
No. I mean, Okilo, it's there's 3 or 4 of them. Okilo is probably
when I think of Okilo, I think of NNE, SMR. Now they got this new one.
That whole group. The whole group. And I think that you hit the key ones. I just think the risk there is ultimately they're going to have to, once they get approval for their reactors, they're going to have orders. And we'll see what the reality of those orders are. Not Oklo, which is like a press release machine, puts out memorandums of understanding for deals that are years down the road. I keep saying, and what I've written, when I just be away from the meme stuff, away from the way the stocks are going, I've said, look, just go look at who's really getting the potential orders. Look at who's behind the private companies that don't have to do the promotion, that aren't putting out press release after press release, whether it's Bill Gates or Amazon or whomever, and see what's really going on in some of those companies. And I think that is where you have to really pay attention to the competition is, because one thing I will always say is, there's the companies that have to promote, that are press release mills. That's a red flag. And then there are the companies that don't have to say a word and are busy actually doing something because they don't have a stock to promote.
Yeah.
And sometimes they know better. Yeah.
The number of press releases is negatively correlated with fundamentals. But how do you differentiate her? Because I know throughout the years, you're talking about non-binding agreements, basically hype pieces that they're putting out as PRs. But like there was a time a year, 2 years ago where it seemed like Palantir was doing that, or 3 years ago where it felt
That's
like
true.
Nvidia was saying crazy stuff, but like their press releases ended up being true. Is there a way you can go through and sort out the good from the bad in these
No, because
instances?
some companies transcend. I wasn't paying attention
Right.
to either NVIDIA or Palantir, and
Yeah.
to be able to say what was actually going on beneath the surfaces of the businesses with the actual fundamentals.
Right.
NVIDIA was an interesting one because it's been a good rolling company throughout multiple cycles and multiple trends with
Yep.
actually, really, I mean, well placed for now many years,
Yeah.
not just right now. So, people wanted to bet on it. I think the people who understood the market, by the way, for NVIDIA really had some great calls. And I came close to buying it when it was toward its lows. And one of its go arounds a while back. And somebody I was talking to knew chips, knew that was buying them. I should have
Wow.
listened to them. But I'm just a nervous Nelly, too nervous
No,
for my own good sometimes.
no, that's good wisdom though, right? There, be open to that special situation or that really special story that does transcend, and the hype is real. Herb,
Yeah.
before we
By the way,
go,
by the way,
yeah,
go ahead. Go ahead. Go ahead.
I was just going to ask you for thoughts on Tesla, but if you have something on
I have nothing, no zero thoughts on Tesla, other than there
me
is
either.
something at Tesla. I will say something interesting about Tesla.
Yeah.
And Tesla, under the service in Tesla, about 10% of his business is solar. And one
Mhm.
thing Tesla is doing, if you look at if you look at Enphase and SolarEdge, the two that
Oof.
are red flagged by me and will continue
Oof.
to be red flagged to me, if you look at
Oof.
them, one
Yeah.
thing I will tell you is Tesla is actually a spoiler to the solar party for some of these guys because their batteries are and their technology that they're using, which used to be somewhat of not getting into string inverters and things like this, the
Please don't.
technology, but I won't, trust me. But that technology has changed. But
Yeah.
more than that, given the costs, batteries are extraordinarily important to a solar system. And Tesla actually is beating the pants off of everybody with its batteries, ease of installation, and cost versus Enphase. And I think that's really something that it doesn't do anything for Tesla. Zero. It's not really part of the Tesla story, but it's interesting that they are actually, having an impact there in a different way, and it doesn't ever get talked about.
If
But one
if
other,
you
yeah,
have
go ahead.
no, if you
Go ahead.
have experience in the market and if you've ever dabbled in, trying to buy businesses or stocks that compete with Tesla, you know how hard that is. So
Yeah. I
I will
just want to
also
say one
say
other
on
thing.
that one, wait, real
Go
quick
ahead.
on the Solar Edge and the Enphase, like you're viewing these similarly, right? Because Solar Edge looks really good from a tactical standpoint. It's got this little, cute little multi-month base that started forming Q4 of last year. Now pretty much launching through above the 200-day moving average. And then there's Enphase, which is like, I mean, where's the support here? It looks like nowhere. This thing literally looks like a zero. It's in free fall. So one looks a lot better than the other in this case.
Solar Edge is just because of the short squeeze. It's
That's
because
it.
it has higher short interest. That is the only reason its stock went up. And I haven't looked at its stock today, but I'm suspect it should be not where it was a few days ago. And
It's been down
Solar
the
Edge
past
was,
couple. Yeah.
yeah, it should come back down. It's got a lot of risk underneath the surface there. I want to say one other thing before we go because I do have to
Yeah.
go and you have to go. And that
Yeah.
is, I always talk about red flags, but I also like green flags. I also do like to point them out every now and then when I have one. And I have this event coming up. This anatomy of a scam I'm going to be doing Wednesday with at 2 p.m. Eastern with JC Peretz is going to be he's going to be I think interviewing me or something like that. But I will say that one thing I'm not going to give away the name in the darn thing.
Yeah.
But I do have one I'm working on. I haven't fully written it. So until I write it, but it's an interesting potential green flag that isn't on many people's radar, but it's actually the stock chart has been pretty powerful.
Love
And
that.
it's one where the person who is behind it and owns a ton of the stock, obviously, who tends to never go on the record, is on the record. And it is one where and it's a person who has a short bias in life but this is an interesting one, and it's just one of those things. Just to know that every now and then I do. I own stocks personally, so this isn't one I own, but it's certainly one that I think is an interesting one for some people in your world. So we'll say,
So just
tune in, as they say.
well, I'm trying to think of it in my head, but just a high
You can.
level. Tell the people what makes something a green flag for you. Like, what kind of opportunities are you honing into? What are you looking for when you green flag something?
Just something that tends to be overlooked, that is a little off the beaten path, that is something, or is something that, I mean, I've done a
Flying
few
under
of
the
them over
radar.
time.
Yeah, nobody's
Flying under the
talking
radar
about
of
it.
most
Yeah,
people, obviously. And in this
right.
case, and I always look for story. What is the hook here? Because I have to have a hook with everything I do. I want to know the hook. And in this case, the hook is
Yeah.
this guy. And it's
Okay.
this, in his view, it's the single best investment opportunity he's seen in his life. And he's not what I would call a promoter. So these are the kind of things that get me intrigued enough that I think it's worth sharing, and then let everybody else do their own work and decide if they agree or disagree with the
I love it.
premise.
I love
Yeah,
it. And it's one of the key cheat codes is finding top operators, masters of their craft. It's an investing cheat code. And
it
Herb, I
is.
know you're good at it. So listen, guys, we're doing a big push for Herb this weekend. You got to check out his stuff. It's if you're somebody who reads our work and has been following the technicals for years, this is such important context. It's not to go run out and short these red flags. It's to know, right, what you're dealing with. It's to be aware of these situations. It's so important. So we're dropping the link in the description. Get in there, sign up, get Herb's notes, and then stop in Wednesday because JC and Herb are going to get on. And I'll tell you, it's a live stream you're not going to want to miss. They're going to break down a lot of stuff. Are you giving away this pick that you just teased to me? Is
No,
that
well, no. Anyone who signs up for my newsletter, for my red flag alerts, will get this.
there you
This,
go.
assuming I get to the finish line, by the way. But
There
they
you go.
will get this, and at least they'll know what I was talking about. But it'll only be if they signed up, and then it'll be there. Can't believe
Yeah.
I'm doing this kind of promotion. It's sort of like, hey, this is like the kind of thing I dislike the most. But I do feel strongly about my work, and I don't mind letting people know I am still kicking and alive and
You're
breathing.
awesome. Hey, it's the business we're in. Don't hate us for it, guys. But really, Herb, we're so lucky to have you on the team. I'm so glad. And I'll be tuning in Wednesday. And guys, I think you all should too. Check out, click the link in the description, sign up for the research. Be back for JC and Herb on Wednesday. That's it. Any closing thoughts, my friend?
No, that's it. I gotta go. Busy day.
Thank you, guys.
See you later.